and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the macro picture, what's been going on over the last few days, and what setups are potentially on the horizon. And we'll also be taking a look at some key pieces of data from the on-chain metrics. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this thing then. What we'll do is we'll start things off by taking a look at the on-chain metrics. Very important that we kind of keep an eye on what is going on here, because there has been some recent developments with the wallet counts and what that might mean for the price action of Bitcoin. So we'll start things off just by taking a look at inflows and outflows, right? So from the 1st of January 2023, we can see that we've had 3.1240 million Bitcoin going onto the exchanges. And since the 1st of January 2023, we've seen 3.0962 million coming off the exchanges, meaning that we've now got 27.8 thousand Bitcoin more on the exchanges than was there at the end of December. Now, what we can of course acknowledge is this is actually increasing. Okay, so we're seeing more flowing onto the exchanges recently. Now, if we come over to the inflows and the outflows line graph, we can of course articulate and show and demonstrate the differences in volume of what is being traded upon. Okay, and very important that we understand this. We have 3.1240 million going onto the exchanges and 3.0962 million coming off the exchanges in 2023, 1st of January to yesterday, which would be the 17th of April. Okay, now when we compare this to the start of the previous bullish market, so the 1st of January 2019 to the 17th of April 2019, we can see that we had 5.2501 million going onto the exchanges and 5.2307 million coming off the exchanges. This means that we're about short about 2 million Bitcoin in terms of the volume that's being going on and off of the exchanges, the Bitcoin that's flowing around, right? And that's important to note, because it's really difficult to think that we have a very similar setup, very similar percentages, yet we don't actually have the same level of volume that was going through it. Very, very interesting. Now, as we come over into the wallet counts, we can take a look and just do a brief update on this. We can see that the Bitcoin Dust, which is a wallet that has over 0.01 Bitcoin, has been on the slight increase here after coming down a little bit. Okay, these are the most vulnerable retail investors, in my opinion. Now, as I go up into the retail-sized wallets, we can see the FOMO is still strong with regular retail investors. These are krill, shrimp, dolphin. Basically, a krill is someone who has over 0.1 Bitcoin in their wallet. Shrimps are over 1 Bitcoin in their wallet, and dolphins are over 10 Bitcoin in their wallet. They are all retail investors in my mind because they all overreact to price movement. They're emotional investors, right? And we can see here that they've been FOMOing in to Bitcoin because they believe that the bottom is in and that they're now in a bullish market. Okay, now what happens here is when we see significant amounts of buying pressure from a retail level, you tend to find that that creates huge pockets of liquidity. Liquidity, basically, in essence, is the ability to trade a product or an asset for fiat or stable coins in the case of crypto, right? And the more liquid a market is, the easier it is for you to buy and sell. The less liquidity, the harder it is for you to buy and sell. Okay, so liquidity is absolutely key, along with supply and demand. These are things that you need to get a good grip on if you want to be in this space, because everything else is kind of second to those things, right? You need to know the supply and demand, and you need to know the liquidity. Those two things are, top tier, and then everything else is secondary. Okay, so as we can see here, a lot of liquidity has been provided for Bitcoin, okay, because we can see a lot of buying has occurred, lots of accumulation at the retail level. That basically means that the retailers have provided the fiat or the stable coins, that form or that half of the liquidity. And if we jump over into the institutional smart money funds, we can see that the larger institutional players have provided the Bitcoin. That's the second half of the argument. You've got the supply, which is coming from your large investors, and you've got the demand coming from the retail investors, and together they make the liquidity, right? So basically what we're seeing here is you see a lot of institutional smart funds, basically big money, wanting to come out of their Bitcoin. They're looking for sellers. Sorry, they're looking for buyers, right? They're sellers and they're looking for buyers. And then you've got your retail investors that are looking for sellers and wanting to buy Bitcoin. The two things together get you that balance. So it's important that we understand that big money is coming out and small money is going in. It's very important because it's hard to think that we're going to see sustained growth to the upside when it's only really being propped up by retail investors and we see big money coming out. Now, most recently, we've seen the Bitcoin sharks. These are your traders. Aggressively coming out of their positions. You can see here that they were accumulating in November. Okay, they rode this pump up nicely and they've aggressively come out. Recently, there's been a bump to the upside in one day here. We did see wallet counts increasing from a low of 15,780 going up to 15,843. So we can see there's a significant push to the upside there. However, at the same time as seeing this, we've also seen that the Bitcoin Kraken, 10,000 Bitcoin per wallet, has actually been on the decrease. So again, you've got a lot of supply coming in here, and it's trying to bring the price of Bitcoin down. Now, we can also see that the Bitcoin whales have also started to see a little bit of a decrease as well. Now, obviously, when we take a look at this on a 365-day view, the Bitcoin whales, over 1,000 Bitcoin per wallet, have been steadily decreasing their positions for a very significant period of time. They were selling the June lows, they've been selling the November lows, and they're still selling even into these lows here. A new lower low in the number of whales was actually achieved over in March, right? So it's hard to think that we're in a bullish market when the whales were selling even in March 2023. So sharks have been aggressively coming out, whales have been aggressively coming out, and the Kraken has been accumulating during the bear market, but recently has started to try to push the price of Bitcoin down, in my opinion, by coming out of their positions. Now, we know that the Kraken-sized wallet in 2018 accumulated during the bear market and then flooded the system to bring us into a new bear market low before actually going into 2019 in a bullish way. Okay, so we know that this is a possibility that we need to consider, and this could be maybe the turn of that. Are we starting to see that shakeout in the space? Before we can get too confident on that, we do need to see the retailers, these ones here who have been steadily accumulating, start to get shaken out of the space. In order for our whales to buy, you need to see the Bitcoin sellers become retail, or the retailers to become Bitcoin sellers. Only when that occurs are we going to see confidence in the market with Bitcoin whales actually accumulating. There's always a buyer, there's always a seller, there's always supply, there's always demand, and it needs to be liquid. Okay, so at the moment, it looks like this, as I said a few weeks ago, is potentially one of the biggest bull traps seen for Bitcoin. Let me know what your thoughts are on that in the comments down below. I'll imagine that there's going to be a lot of "I'm wrong" in the comment section below, but you know, it is what it is. I'm not going to change my opinion just because of a few people who think that drawing a trend line is going to magically mean that we're in a bull market. The data here suggests otherwise, and it's important that we understand how the data is derived and what the data potentially means. And this is, of course, only my thoughts and opinions on it, but you know, it's something that I truly do believe in. Let's move down into the charts. So what do we see? Well, on the daily chart here for Bitcoin, we can see higher highs, higher lows, and as I have a tendency of saying, these have a move, or these tend to move to the downside. If I zoom out of this, you can see just how many we've had during this bear market where we see this potential scenario. And of course, like I showed the other day, there is still the possibility that this is one big setup for a big move to the downside, and that is a concern. Don't like that idea, but it is what it is, and yeah, we are where we are. So at the moment, this isn't looking overly promising. And if you caught the Bitcoin video that we saw this morning, this particular area right in here is potentially constituting a trend structure reversal. 1, 2, 3, we're in 4, we've got to come down into 5. And that there could be a start of something big. It could be, and I say it's a could because it's not confirmed, could be something like this. And that's going to start bringing us down into some of these additional levels. And if we do this, and that's a 5-wave structure, yes, there would be a relief rally, but we would still continue to fall down. Minimum expectation would be a 5-3-5, but you can even go deeper than that with a 5-3, 5-3, 5 coming in like so. Okay, so we need to be aware that that is a true possibility, and we're just at the very beginning of that. I don't like the idea. I don't want to see us go down, but it is what it is, and I'm not going to be kind of ignoring what I'm seeing inside the data. So as much as we want it to be a bullish market, I just do not see it being a bullish market at the moment. Moving over into smart money, we can see that there's a lot of fair value gaps. These again are going to take us down more towards the $18,000 level. At the moment, it's looking pretty likely that we have to revisit the equilibrium area as well. On the daily chart, we do have a bullish conformational change here, a structural change. And, that typically when we do see these, we actually have a retracement to the opposite direction. So we created the change of character, we moved back down, and then we would go back up, right? So we're looking for a natural correction regardless. Equilibrium is pretty interesting. It's around $20,000 or 22,000 to 23,500. So that's an interesting level. But we do have these fair value gaps that at some point I do think have to be filled out. I don't know how long that's going to take, but it is what it is, and we'll be looking for those kind of directions at some point in the market. Ultimately, though, we are in an interesting point, and my biggest concern is that we do have this really long, prolonged bear market situation, and all of this because we do not have a trend to the upside here. My concern is that we do something to this effect and we go down lower than $10,000 in the end, and that will really be where this thing would end, in my opinion. But we'll see how time progresses and whether or not that's going to be accurate or not. At the moment, if we come over to this one, we can see that we're right up in the resistance ranges. This is basically 28,881 to 31,848. So interesting levels are in here, and again we still have that interesting level as well at the 32,917, but at the moment it looks like this is going to be our resistance, and it doesn't look pretty from this weekly chart. We're also heavily overbought, and we have been overbought for quite some time, 84 days now, up in this overbought area. And that is above average for the duration that we normally would see Bitcoin up in the overbought range on the weekly time frame. So at some point we are going to be looking to come back down, whether that's going to be testing the equilibrium or the 200 EMA, yet to be seen. Structure wise though, it doesn't look great on the smaller time frames, and on the macro time frames here it doesn't look great either. There's a little bit of positivity to be had on the daily, but the weekly not so much. But yeah, that's kind of a brief update as to what is going on at the moment on Bitcoin, on the macros. Let me know what your thoughts are in the comments below. If you found it useful and informative, smash the like button. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.